All right, let's jump into today's deep dive. We're going to be taking a closer look at Devyani International Ltd DIL. They're a big name in the Indian food scene.
Yeah, you've probably seen their restaurants around.
Exactly. They're the folks who brought us KFC, Pizza Hut, Costa Coffee, all those familiar names. But what's interesting is they just released their Q2 FY25 financial results, and it looks like they've got some ambitious plans brewing.
Oh yeah, definitely ambitious.
Yeah.
They're aiming for 2,000 stores by the end of the year, which is a big jump.
It is a big jump. And they're not stopping there. They're also bringing 3 brand new international brands to India. So we're going to be digging into all of that today, using both their press release and investor presentation. Let's see what we can uncover about their plans.
Sounds good. So are we thinking like a recipe for success kind of angle here?
Yeah, I like that.
Uh,
So let's start with the big picture overall performance. They saw a pretty impressive 49% year-on-year revenue growth for Q2 hitting ours, 12,222 crore. And for the first half of the year, it's even better, 47% jump year-on-year reaching ours, 2,444 crore.
wow, those are some serious numbers.
Right. But what's the context here?
Yeah, we need to see how that stacks up against what analysts were expecting and what's happening in the industry overall. Is this normal growth or are they really outpacing everyone?
Good point. Unfortunately, the sources don't give us those comparisons, but we do know they added 139 new stores just in the first half of FY25, so they seem to be on track to hit that 2,000 store target.
Yeah, and it looks like their strategy is built around two main ideas: food on the go and house
Yep.
of brands.
Okay, so food on the go. I'm guessing that's all about capturing those quick bites.
Yeah,
People with busy lifestyles always on the move.
exactly. Quick service convenience.
And House of Brand, that sounds like they're building a diverse portfolio to appeal to different tastes, different budgets.
Right, offering something for everyone.
Yeah.
And I think understanding those two ideas is going to be key to figuring out their expansion plans.
Yeah, definitely. Now let's zoom in a bit and look at how their core brands are performing in India. We know the overall picture is good, but what about the individual brands?
Good question. So KFC India saw a respectable 6.8% year-on-year revenue growth, reaching ours, 543 crore. Pizza Hut India, a bit slower, just 0.5% increase to hit ours, 185 crore. And then Costa Coffee is doing really well, a 41.6% year-on-year jump totaling ours, 49 crore.
So some very different stories there. Clearly, some brands are doing better than others. It makes you wonder what's driving those differences. Are we seeing consumer preferences changing?
It's a good question. Is it the brands themselves or are there larger trends at play? Like, for instance, KFC's experimenting with new variations of their rolls, both Indian and international flavors. Seems like they're trying to broaden their appeal a bit.
Makes sense. I guess you always got to stay relevant, keep innovating. What about Pizza Hut? They had the smallest growth. Any ideas why?
Well, they did bring back their Mamma Mia pizza with some improvements. Maybe they're trying to win back some customers.
So maybe a bit of a defensive move, trying to stay competitive?
Could be. And then Costa Coffee, they're definitely expanding beyond just coffee.
Right.
They've added regional favorites like Kathy rolls and chicken seek, even some international flavors and savory items.
Interesting. So they're becoming more of a meal destination, not just a coffee break.
Right. Tapping into that food on the go trend we talked about, while also expanding their menu to attract a wider audience.
Yeah, it's all about catering to those changing lifestyles. Now, here's where things get interesting. Their international performance is really impressive. They're seeing huge revenue contributions from new markets.
Yeah, huge is right. Their international revenue jumped to ours, $3,943 million in Q2 FY25.
Oh, and what was it the previous year?
Just ours, $416 million. So that's a massive increase.
Okay, wow. So where's all this growth coming from?
Well, a big part of it is their acquisition of 296 KFC stores in Thailand. It seems like they're going all in on international expansion.
Thailand, huh? The Colonel's really gone global. But expanding internationally comes with its own challenges, right? Different cultures, different tastes.
Oh, absolutely.
Yeah.
It's not just about copying what worked in India. You have to adapt to each market.
Right, and figure out how to navigate all those cultural and logistical differences.
For sure. The sources don't go into detail about how they're handling all that.
Yeah.
But it's definitely something to think about as we look at their overall strategy.
Definitely lots to consider. And we'll dig more into that in the next part of our deep dive. Stay tuned. So we've seen how ambitious DIL is, especially with that Thailand expansion. But you mentioned earlier that going international comes with its own set of challenges. What I'm wondering is how all of this is impacting their profitability. Is the picture as bright as their revenue growth suggests?
That's the million-dollar question, right? It's easy to get excited about those big revenue numbers. But we need to dig a little deeper and see what's happening beneath the surface.
Hmm.
And when we look at their profitability trends, it's a bit more of a mixed bag. Actually, there's a noticeable difference between their overall performance and their India-specific numbers.
Yeah, I noticed that too. Their consolidated gross margin and brand contribution, they both dipped a bit. But when you look at just their India operations, those metrics actually improved. So what explains that difference?
Well, it probably comes down to those international operations. Remember those 296 KFC stores they acquired in Thailand? They're still in the early stages of integration. And that always comes with upfront costs, adapting to a new market, getting everything running smoothly, and then there's the whole currency exchange thing to deal with.
Right. So basically, it's like those growing pains you get when you enter a new market. You have to invest time and resources to get things up to speed.
Exactly. And all of that can impact profitability even when revenue is going up.
So it's a bit of a short-term hit for long-term gain, hopefully. But the question is, will those international ventures eventually become as profitable as their established India business?
Right. That's what they're banking on. And while we don't have a crystal ball here, we can look for clues in their strategy. They're clearly focusing on Southeast Asia, a region with a lot of growth potential, growing middle class, increasing urbanization. And there's definitely a demand for Western-style fast food. But those markets also come with a lot of competition, both local and international players.
So it's not as simple as just replicating their India success story. They need to be smart about adapting their approach to each specific market.
Exactly. And that's where I think those food on the go and house of brand strategies we talked about become really important. Food on the go is perfect for those busy urban lifestyles that are becoming more common in Southeast Asia.
Hmm.
Convenient locations, grab and go options, even delivery services. And then house of brands allows them to offer a variety of choices to appeal to different tastes and budgets.
Makes sense. It's all about expanding their reach, not just geographically, but also across different lifestyles and preferences. But let's get back to those profitability challenges for a second. The investor presentation did mention some specific factors that are putting pressure on their margins, right?
Yeah, they did. They highlighted a few key things that are impacting businesses across the board, not just DIL. First, there's the rising cost of ingredients. Inflation and supply chain issues have been pushing up prices for everything, and that inevitably trickles down to consumers.
Yeah, we're all feeling that at the grocery store these days.
Exactly. And then there's the competition. The QSR space is getting more and more crowded, both in India and internationally. So DIL has to constantly innovate, invest in marketing, and maybe even adjust their pricing to stay ahead of the game.
So how do they stack up against the competition in India specifically? Are they the clear leader, or are there some serious contenders out there?
Well, they're definitely a major player with their extensive network and popular brands. But it's not a one-horse race. They've got competition from other big chains like McDonald's and Burger King. And there are also a lot of homegrown brands that are gaining popularity.
So it's a dynamic market, lots of players vying for a piece of the pie.
Exactly. And it's not just about market share either. Consumers are becoming more health conscious. They're looking for healthier options, plant-based alternatives, sustainable practices. DIL needs to show that they can cater to those evolving preferences while still offering the indulgence and value that their core brands are known for.
So it's a balancing act. They have to adapt to all these changes while staying true to their roots.
Precisely. And that's what makes this whole story so interesting. DIL is at a crossroads. They're ambitious, they're making big moves, but they also face some serious challenges.
Okay, so let's step back for a second and recap what we've learned so far. We've seen their aggressive growth strategy both in India and internationally. We've talked about the profitability challenges they're facing due to rising costs and intense competition. And we've discussed the need to adapt to evolving consumer demands.
You got it. They're playing a high-stakes game. And the big question is, will their ambition and strategic moves pay off? To answer that, we need to take a closer look at their financial health, their management team's track record, and all those broader economic and regulatory factors that could impact their journey.
All right, so we've talked about DIL's big ambitions, their strategy, the challenges they face. Now the big question is, can they actually pull it off? Can they turn all of this into lasting success?
That's what we're trying to figure out, right? We've seen their expansion plans, those new brands they're bringing in. We've analyzed the rising costs, the competition, and those changing consumer tastes. So now, what are the things that will really make or break their success?
Right. What are the key factors we should be looking at?
Well, I think we got to start with your financial health. We saw some mixed signals on profitability, but what about their overall stability? Can they keep growing this fast without overextending themselves? When we look at their balance sheet, it's clear they've been raising a lot of capital through both equity and debt financing.
So they've got the money to fuel their growth, but what does that mean for their financial risk?
It means they're taking on more debt. Think of it like buying a house. You might get a mortgage to help you afford it, but that also means you have a loan to repay. With interest and all those financial obligations, it's similar for companies like DIL. Debt can be a useful tool, but it also increases their risk if things don't go according to plan.
So it's a calculated gamble. They're betting on their future success to pay off that debt.
Now, what about the people leading the charge? Does DIL's management team have the experience to navigate all of this? That's another crucial piece of the puzzle. The sources don't give us a ton of detail about the specific leadership team, but we do know that DIL is part of the RJ Corp group, which is a well-established conglomerate with a diverse portfolio. So it's likely they have access to some seasoned executives and financial experts.
Right, so they've got experience. But is it the right kind of experience? Expanding into new markets, especially internationally, that requires a certain skill set.
Exactly. It's not just about managing finances. It's about understanding different cultures, building relationships in new territories, adapting their operations to different environments.
You need that cultural awareness and the ability to be flexible to really succeed in those diverse markets. And then there are all the external factors to consider. Are there any economic or regulatory trends that could throw a wrench in their plans?
Well, the good news is the Indian economy is doing well right now, which is good for the QSR sector. But there are concerns about inflation and potential interest rate hikes, which could impact consumer spending and make borrowing more expensive for DIL. And then you got the regulatory landscape. Changes in food safety standards, labor laws, or even tax policies could have a big impact on their operations.
So it's a complex web they're navigating, internal and external factors, all while trying to stay ahead in a very competitive industry. So taking all of this into account, what's your overall assessment? Is DIL on the path to greatness, or are there just too many potential pitfalls?
You know, it's tough to say for sure. They've got ambition, resources, and a clear strategic vision that could definitely lead them to a top spot in the QSR world. But they also face those significant challenges: managing their debt, navigating those complex international markets, and keeping up with those ever-changing consumer preferences.
So it's a bit of a cliffhanger. We've uncovered a fascinating story, but only time will tell if they can achieve their goals. What are the key takeaways you want our listeners to remember?
I think the main takeaway is that DIL is a company to watch. They're making bold moves that could reshape the entire industry. Whether they ultimately succeed or not depends on their ability to execute their strategy, adapt to change, and consistently deliver a great experience for their customers.
Very well said. And for all of you listening, keep an eye out for those new brands hitting the streets in 2025. You might just find yourself sipping boba tea while enjoying some poutine, all thanks to Devyani International. This has been a great deep dive, and we hope you enjoyed it. Until next time, happy eating.